Welcome back. I'm Pratap here. Today is 16th December 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At the channel homepage, please click on the tab post, or some of you might be seeing the tab community. Click on the tab, you get access to this post that explains about our free training course. And the cost of this course is over 8,000 US dollars. Please make use of this opportunity. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. You need to start our training from lesson 1.1 and just scroll down to the bottom of the page. Here you have the first lesson is available, and starting from lesson 1.1 all the lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Okay, now let's get into the analysis discussion. Yesterday, the previous end of the day report, we identified 13 high liquidity zones from daily and 75 minutes time frame. We got good trades today. The first one is Delhivery, and this is a drop base drop. This is a daily high liquidity daily supply zone. And this daily high liquidity zone is identified by our NeoStock software, and we need to fine tune this zone as per our HLQ zone strategy. So let us fine tune at 75 minutes time frame. How I fine tuned? Here I consider this as a drop candle, 3 base candles, and then again a drop candle, drop base drop. And this is the 75 minutes fine tuned zone. This is again fine tuned with 15 minutes time frame. In the 15 minutes, here we have drop, 3 base candles, and again a drop candle. It's like a lower time frame zone as an horizon to the higher time frame. See, later on it picked up the orders from this entire leg out candle is created for this daily zone. And another interesting thing is in 15 minutes time frame, did you notice these two drop candles? This is a drop candle, this is another drop candle. Do you remember the concept I explained, a new concept I explained for finding the supply demand zones? Between the two leg out candles, that means between two drop candles, the lower wick of this candle and the higher wick of this candle, if you draw a zone, mostly the zone will be having a strong institutional order flow. Most of the times, not every time, but most of the times. But this happened within the high liquidity area. Definitely this is one area we should concentrate. You can draw a zone, drop, lower wick of this candle and higher wick of the candle, you can draw the zone. But if you go to the one time frame lower, or sometimes even 2 time frames lower, you may find a zone according to our supply demand zone price action theory. This is what we discussed earlier. And this is one important price action clue. And another important price action clue is the prices were dropping, and after that again prices were started moving up. They came very close to this area where we are expecting a strong institutional order flow. Prices came near and then again came down. This is another price action clue indicating that prices are nearing to the zone, and again we are seeing a rejections moving away from the zone. Why we are talking about these price action clues? Because we don't have a 15-minute zone here. That means whatever the trade we are planning in this area, that could be an aggressive trade setup. That's why we are cross-checking. Aggressive trade setups are quite dangerous, especially for beginners, because most of you people are not having a proper experience in using these concepts, making mistakes. That's why I told all the beginners try to avoid aggressive trades unless you have very good confidence. But this is the area we should definitely focus, because this is between the two leg candles we are identifying the institutional order flow. Mostly those order flows are very strong. Apart from that, we also got a clue, price action clue. Prices coming near to the zone and they were again moving away from the zone. That indicates a strong order flow. So that's why in the 5 minutes time frame here identified a clear zone as per our supply demand zone price action concept. Our concept is institutional imbalances. That is what you learn in lesson 2 in our training course. See, here you have a 5-minute zone. This is a ERC candle, failed ERC, can be considered as a leg-in. You have a base candle, and this is also medium size base candle. You can include as part of the base. That is what we discussed these scenarios. And then you have a leg out candle. The actual initiation is started from this candle, medium size candle. Maybe the time is not enough to make it a big candle. That's why the time is this is the 5 minutes time is over and price continuation is there. That way, this is the way how I understand the real order flows in a zone. This is the candle area, but here mostly both these candles are almost the same length. You are seeing not much difference in the zone. Let us assume this candle is something half of this candle size. Then really you see the order flow within this half of this candle area. But anyway, this is the drop real base candle, and our actual imbalance started from this candle and continued. See, all these are all follow through candles. After that, prices came near to the zone and again moved down, indicating this is the area we have a strong order flow. Definitely we should plan for a trade here, because if the order flow is very strong, we get a good ROI we get. That is the advantage we have. But if you do a wrong analysis, mostly your trades will be stopped out. So that's why I am alerting all you people, those who are having less experience while planning the aggressive trade setup, make sure multiple price action clues will be available. I have 2 clues here. One clue is this is the area between the 2 leg candles in 15 minutes time frame. Between 2 leg candles, generally the order flow between the wicks of the 2 leg candles, there could be a strong institutional order flow that we can identify one time frame lower or sometimes 2 time frames lower. That is what we identified here. Second price action clue, prices came near to the zone and then again started moving down. Okay, apart from that, we have again there is another rally base drop. This is the area, probably strong institutional. This is the rally failed ERC candle, 2 base candles and a drop candle. This failed ERC candle can be used as a leg out candle because it is completely moving out of the zone. After that, prices came, again pushed it down, again came near to the zone, pushed it down, and here third time it came into the zone, and this time leg out is created for this entire daily zone. During this process, institutions kept a strong order flow in this area, but it is not a fine-tuned zone, but this is an aggressive trade setup. That way we have to plan our trade. And finally today, prices entered into that zone and gave a good trade for us. See, today prices entered into the zone, up to the middle of the zone prices moved, and then it pushed until the 15 minutes zone. Here we have a 15-minute zone available. Drop base rally. See, our initial target is this is the one. almost piercer zone, but we can use piercer zones can be used for targets. But later on, this is the revised target. Why this is the revised target? This candle is formed only after we took the trade. After we took the trade, this candle is closed and resulted as a leg out. Many times what happens, instead of leg out candle, sharply prices will come down. It may not result as a leg out candle. After that, it will reach this target. But today what happened? After we took the trades, this candle formation has been completed. Immediately from this target, we should revise to this new target, drop base rally. That way it reached the target. And when we got the trade, let me go to the 5 minutes, we get better clarity. We got the trade in morning 9:25 minutes candle. And when it reached the target at 10:25, 5 minutes candle. That means less than 1 hour, your trade is completed. How much profit it has given? Delhivery has given 8,235 rupees profit, which is 6.5% ROI as per one futures margin cost. Because futures margin is something around 1,15,000 or something. I didn't exactly remember, but that's why you got a very good ROI. So this is the first one. We got excellent profit. Next we discuss about Bank of Baroda. Bank of Baroda is a 75 minutes high liquidity supply zone. Very clean trade, this one. It's a 75 minute zone. This is what identified by our software. A rally, 3 base candles and a drop candle. Rally, base, drop, a 75 minute zone identified by our software. This 75 minute zone is fine tuned with 15 minutes time frame. In the 15 minutes time frame, we have drop 1, 2, 3, 4 base candles and again a drop candle. This is the fine tuned 15 minute zone. Inside this fine tuned 15 minute zone, I have identified a 5 minute zone. So here you have a rally, you have a base, you have a drop candle. Rally, base, drop. This is we are planning on the type 2 proximal, mainly for the risk management point of view. And then follow 3. See, if you keep this candle, this is looking like a base candle, right? This is the problem with charting applications. When a particular candle is having extremely large size, previous candles all of a sudden looks like a small candle. That's why many times what I do, I hide the candle to understand the real structure. Now I compare the other candles. See, all these are all medium size candles. So compare it to these medium size. This is a medium size. This is a medium size. See, this is a large candle. So this is a medium size rally candle. See, compare it to this, double the size this candle is having. See, wick to wick, from here to here, and having good body. This is a very large candle. Now it looks like a base candle. That's why you should be very careful. If this is a base candle, what you do? You draw zone from here. That way your risk will be increasing. So carefully you have to draw when you are seeing big candles. Try to hide them, you get real candle structures on the chart. Okay, several times I've been telling, because many times new people are joining, listening. So I have to repeat these points again and again. Okay, today what happened? Today prices entered into the zone at what time? 9 o'clock 50 minutes candle, prices entered. After that, prices sharply moved until the 15 minutes target. Actually, strictly speaking, this is not the 15 minutes target. This is the 5 minutes target. Why I have drawn? This is acting as a high liquidity zone. 15 minutes target very far away. Somewhere you have to draw your 15 minutes target. And see this how this 5-minute zone prevented the prices not moving. How can we say this is high liquidity? Because a lot of times prices moved within this area. Let me draw wick to wick. You get even better clarity. See here. First test, again close to this. Second test, again third test, again moved. Fourth test. Now we got the entry, and now fifth test. By this time you should realize this is the place you have to exit. And good RR is also there from here to here. When you are seeing such kind of hurdles, many times 1 minute high liquidity zones, or at least 1 minute high liquidity zone, after maybe 1 or 2 hours they will be violated. Worst case scenario after 3 hours, because their lifetime could be during intraday. Mostly they will be violated. If not on that day, maybe next trading session. But 5-minute zones, they may violate during the intraday or they may not be. Anything may happen. So that's why we can't take much options to keep your trade for these 5 minutes high liquidity zone. Whenever you see 5 minutes high liquidity zone, you should exit when prices are reaching. And when you got the trade morning 9:50, when you exit 10:50, within 1 hour your trade will be completed. Okay, after that it is pierced. It's not violated, because this candle is having the order flow, institutional order flow. See, again it is holding. It never let you. It never let the prices move up to 15 minutes target zone. So sometimes you should carefully observe these high liquidity zones. At least based on multiple time the zone is getting tested, at least you can assume 80% scenario, you can assume that could be a high liquidity zone. So at the time you should not be very greedy to capture your profits up to this the real 15 minutes target zone. Okay, anyway, how much profit it has given from here to here? Bank of Baroda has given 6,435 rupees profit as per one futures margin cost. If you are taking options trades, you get even more profit. Maybe 3 times or 4 times more you may get, but the risk management is also 3 to 4 times. It's not easy. That's why you should be, unless you are an experienced option trader, you should be very careful, especially risk management point of view. Okay, anyway, futures point of view, we are getting 3.6% ROI as per one futures margin cost. Bank of Baroda. And the next one is REC Limited. REC Limited is again a 75 minutes high liquidity zone. We have a drop, base, drop. This is also very clean and a neat trade. Drop, base, drop. Fine tuned with 15 minutes time frame. Here the 15 minute structure we identified here, drop, base, drop. And this 15 minute zone acting as an horizon to this 75 minutes high liquidity zone. That means overlapped at the distal line. When zones overlap at the distal line, mostly we consider them as the horizon. At least 90% scenarios, those zones will act as a horizon, the lesson 22 concept. 90% scenarios. 10% obviously our analysis may fail. You can't expect any concept 100% perfection. Okay. But what about here? Here you have a drop candle, rally candle, drop candle. The moment you hide this, you get better clarity about these candles. So no base candles in between. So here you can't plan any trade. These are the pivots. Pivots will be violated easily. I already explained about pivots in the phase 1 training program. Okay, this horizon, drop base, drop 15 minutes horizon, you can't plan the trade. You need to fine tune with 5 minutes time frame. So go to the 5 minutes time frame. So the 5 minutes time frame is having a drop, 1, 2, 3, 4 base candles and a drop candle. Okay. So this 5-minute zone again acting as an horizon. And here some of you may get option. This may consider as a drop based drop. If you consider drop based drop, this would have been already let me keep horizontal line. So prices, it looks like PRs at this zone. It looks like. So that's why I'm considering this as a tinny candle. Tinny candles, even 100% body, by default they will be a base candles. Tinny. That's why lesson 3 I explained. Lesson 2 or lesson 3 or lesson 1. I didn't remember. But these lessons I explained, first 3 lessons. All these candles. We classify into 3 types. Small candles. Small means tinny candles. We don't bother about the body. Even 100% body also, they have, by default, they are base candles. And medium size candles, the ratios are important. Large candles, again, ratios we don't bother. Even 40% body also we will consider as a leg out, but the body should come out of the base. That is important point. So that way. So drop base, drop, part of the base, and it picked up the orders, and then the movement started, and leg out, everything is part of this movement. See how sharply prices moved after picking the orders from this area. Exactly today also same thing happened. From that area only. Wherever it picked up the orders, exactly from the same area. If I draw horizontal line, you get clarity here. See today also exactly, almost the same area it picked up the orders and came down. And where it pushed the prices until 15 minutes target zone. Here we have a 15 minutes target zone, rally base rally, and reached the zone. And how much profit REC Limited has given? This is a LTF zone as an horizon to the HTF, but and also it is fine-tuned zone also, because the 75 is having a 15 minutes fine-tuned but at the distal line, and also 5 minutes fine-tuned at the distal line, and the fine-tuned 5-minute zone is acting as an horizon to this entire daily this entire 75 minutes high liquidity supply zone. So lesson 22 concept, how well they are working. And REC Limited has given 6,550 rupees profit, which is a 4.1% ROI as per one futures margin cost. How much time it took to get the profit? Let me go to 5 minutes. So this is the candle we got, the trade. This is morning 9:30 candle, and when it reached the target, morning 10:55 candle. 9:30, 10:55. That means maybe 1 hour, 25 minutes, close to 1.5 hours this trade. So this is about REC Limited. Next one is Zydus. Zydus almost last 1.5 hours of the market, the trade has come. Where is Zydus? This is a daily high liquidity supply zone, Zydus. How our software identified this zone? Our software identified this zone as a rally base drop. Rally base drop. This is the daily zone. This is the failed ERC candle. Oh, sorry, not rally, maybe. This is a drop candle. This is not a failed ERC candle because it is having sufficient body. Failed ERC, generally the body less than 30% we consider. Actually, that is one level to make you people understand, but internally, software point of view, it is different. Software point of algorithm point of view, it uses a complex algorithm. First of all, it verifies this is having sufficient body to qualify as a leg out. I think software might have considered this as a drop based drop. That's why I have drawn within this. Otherwise, if it is a rally, I would have drawn up to this. I would have drawn zone like this, the higher wick of the leg-in candle. This is a drop based drop. So I have drawn the zone. Only the base candle and leg out, whichever is having highest, the base candle is having. So ignore the leg-in candle because it is a drop candle, drop based drop. Okay. And this daily zone is fine tuned with 75 minutes time frame. Here we have a 75 minute zone. We have a rally candle. You have 1, 2, 3 base candles. A medium size candle, like candle, is also part of the zone. But I have drawn within this area, these candles, base candles area. Because I want to limit within the zone. Don't want to go out, because this is the higher, because my focus should be on the lower time frame order flows. Okay, there is another 75 minute zone here, drop base drop. This 75 minute zone as an horizon to this entire daily high liquidity zone. See, this is the daily high liquidity zone, but this 75 minute zone, of course, this is a fine-tuned zone at the distal line, but that fine-tuned zone at distal line is also acting as a horizon to this daily zone. That's why this is also a very important zone. But we take our trades at the fine-tuned 5-minute zones. So here also we have a rally-based drops. And now let's go to the next time frame, 15 minutes. In the 15 minutes time frame, here we have a 15-minute zone. This is the one rally. You have 1, 2, 3, 4 base candles and a drop candle. Let me hide, you get better clarity. This is the drop candle. And here also you have a 15 minutes fine-tuned zone. You have a rally, you have 1, 2, 3, 4 base candles. See, this is the failed ERC candle because body is very less than 30% in the entire candle. But this body came completely out of away from the zone, moved away from the zone. That's why it is qualified as a leg out candle. If you apply dynamic view, static view, you won't get clarity. Dynamic view, at some point of time it is a rally candle. After that, from here again it is a big drop candle at the time of closing the market. I mean at the time of closing this candle, not market, at the time of closing this candle. That's why it is a valid leg out candle. I explained these concepts in our important HLQ zone strategies videos. You can find in that playlist. We have a playlist, important strategies and analysis playlist. There you can find these concepts. All important HLQ analysis videos I am keeping in that playlist. Okay, because this is an horizon, see, multiple times it is tested. It picked up the orders, came down, picked up the orders, came down. Now this time the daily leg out candle formation is taking place here. So definitely next time we can plan a trade in this area. We have to plan a trade. But before that, this zone has to be violated. But it is having multiple order flows. First of all, we have rally 1, 2, 3, 4 drop candle. This has to be fine tuned with 5 minutes time frame. I have identified 2 order flows in the 5 minutes time frame. One is a high liquidity order flow and another one is maybe a normal one, but we can plan a trade because the type 2 proximal entry is not tested in this area. Okay, what is that? You have a rally, you have a base candle. This is a medium size candle. Generally it should be part of the base. But why I am not considering this is the actual imbalance started from this zone. lesson 2. In our training lesson 2, we talked about imbalances and balance. So our concept is based on the institutional imbalance. The imbalance started actually. Imbalance when it will start? When there is a equal demand and supply zone. Now all of a sudden the supply dominated the demand, but the time is completed. It is resulted as a medium size like candle, but continuation to that again prices are coming down. That way I am assuming the imbalance started from here. Then where is the balanced area? Probably this is the candle. That's why in this candle, up to this type 2 proximal level, I am planning my trade. Did you get the logic behind how I am analyzing this? Of course, I can also draw a zone like this. But see, the risk is increased. More risk. You may ask a question, if you draw like this, prices may come here and then come down. Go down. That way you will be missing the trade opportunity. Yes, sometimes we will miss. That risk is there. But when you identify the imbalance properly, mostly your analysis, 95% your analysis will be accurate. See, prices came down and see here, the actual imbalance is in this area. See, now they were started moving down from here. Of course, type 2 is not tested, but before type 2 proximal, prices were started moving. That means this is the area we have a strong order flow. See how I am observing these prices, price actions. Exactly the same way, if you start thinking, you will also draw the zones exactly the same way how I am drawing. Maybe initially you may face some difficulties because of lack of experience, but slowly you will understand. One day you get perfection. That day onwards you draw all the zones like a true professional. Until that time, some patience is required for you people. See, every zone if you draw in a easy way, everybody will be able to draw the zones, right? We don't require this much training. First you are learning how to draw the zones as an inexperienced person. Then slowly improving the concepts and you are drawing some complicated zones also. Today you are in a position because you learned hidden zones, concepts and all. Now you are getting into the experienced level by understanding where the imbalances are started. That's why always I tell you guys, lesson 2 is my favorite video. Because the real essence people should understand. The story behind the imbalances. Where the institutional actual order flows are there. To identify that, the lesson 2 is a very, very important concept. Maybe because of lack of experience, you may not be able to understand the real essence in that lesson. First time when you are learning lesson 2. Now you got the experience, now you go to lesson 2 video and listen it again. Now this time perfectly will understand why I told some important points in that particular lesson. And also you will understand why I am telling lesson 2 is my favorite lesson. That talks about imbalance. The imbalance area is you have institutional order flow. Earlier prices moved in a balanced way. All of a sudden increase in demand or increase in supply. The prices were moving in an imbalanced way. That means sharply moving up if it is a demand zone or sharply moving down if it is a supply zone. That is the time your leg out candle is getting formed. That way you are getting leg out candle. Before leg out you see the balanced area. That balanced area you have institutional order flow. Because the candles are divided into multiple time frames, what happens sometimes the time when imbalance is started, that means if it is a supply zone, prices are moving down. The imbalance is started, they are moving down, but in between the candle time frame is time is completed. That's why it looks like a medium sized candle. But because of the imbalance, you are seeing the continuation of that candle. Imbalance is continuing. In that way, instead of drawing a zone like this, how I am drawing? I am drawing the zone like this. What is the advantage I am getting like this? Now my risk management will be much easier for me. Of course, all these are all advanced level thinking. I do accept that point. But at some point of time, you should also get such kind of understanding. You should not act like a dumb people, how people are blindly learning these supply demand zone concepts always keeping that 50% only the rule, or 75 body percent is only the rule. That way people are learning. And they are thinking that is only the concept. That is a kind of by-hearting the concepts. But initial stage, okay, when you are a beginner, at least you should not get confusion by learning these advanced concepts. Those rules are okay. But if you stick to those rules forever, you never become a good trader. Why I am teaching everyday HLQ zone analysis videos? Of course, one is for my marketing point of view, for my NeoStock software. The concept I developed, the entire world should know about that. That is one thing. But for our point of view, I am, instead of teaching how much profit I got from this zone, I am also teaching you the concepts wherever they are applicable, so that you people will gain experience. That's why listening these HLQ zone analysis videos in a perfect way is very, very important. See, today you have a lot of good learning points from these concepts. Next time you will also think the same way, where exactly the imbalances are starting, the starting point. That way you will start thinking. That way you will try to manage your risk. But if you do a wrong analysis, what happens? Suppose, let us assume there is no imbalance here, but I drawn the zone like this instead of drawing like this. Now prices just reached here and started coming down. Do I get entry? No, I might have missed the entry. If I would have drawn a zone like this, my trade would have been executed and prices would have come down. But remember, before you take a trade in this zone, this particular 5-minute zone has to be violated. And moreover, this is a high liquidity zone. See here, you have a leg-in candle as a rally candle, you have two base candles, and then you have a drop candle. This rally base drop is holding the prices. See, the prices entered, first test came down, moved down, again second test, again moved down, again third test, moved down, fourth test, moved down, and the fifth test on the next day, next trading session, fifth test, and today it is sixth test. See here, today sixth test. Prices came down and reached the target. Okay, when it entered into this zone at afternoon 1 o'clock 15 minutes, 13:15 hours. When our market will close? 15:30. Almost 2 hours time is there, last 2 hours. Okay, last 2 hours, now you should go look for a 15 minutes target. Yes, if it is near, you can go for the 15. But where is our 15 minutes candles here? Where is the zone? You have a rally base, rally is there. Here probably this could be your target. But reaching this much target within 2 hours may be possible or may not be possible. And apart from that, now everybody please concentrate here. How I set this target, you will understand. I have seen these two rally candles, rally candle, rally candle. Delhivery, how we took it the trade, aggressive trade, between the two drop candles. There you have seen two drop candles, drop, drop, highest wick and lowest wick, you have drawn a zone. Now again you see, you have a rally candle, you have another rally candle. Between the two rally candles, see the high of this candle and the low of this candle, I have drawn the zone. Probably this is the area strong institutional order will be there. And if this order flow is preventing my stocks to enter into this zone, it won't reach the target. That's why what I did, before looking for the trade, I looked, are we getting 1:3 or not, until this area, because prices did not enter into this area. Next candle, next 15 minutes candle, prices entered. See how sharply you should take decision in the live market. That is very, very important. This is a good lesson for you now. See, when you see these two candles, immediately I have drawn this zone. See, time I have only 15 minutes time. Next candle we got the trade. This candle is completed. Already in this candle need not be 15. Next 5 minutes prices may reach also. So quickly you have to draw the zone. And quickly you have to keep your entry. Are we getting 1:3 or not? See here. The moment I draw from here till this zone, I got only 2.31 RR. Can you reject the trade? No. Why should we reject? Because we have good risk is there. That means good order, institutional order flow is there. Generally risk is nothing but your institutional order flow. If it is a weak, risk will occur. If it is not weak, it will result as a profitable. So 1:2.3. Mostly people will reject this trade. But I didn't do like that. What I did, I slightly moved my entry. Moved up. Until I get 1:3 RR. See here, exactly here, we are getting 1:3 RR. So what I want to do, if prices entered into this entry level, then only I want to take a trade. Suppose if price touched this fine-tuned zone, came down, I will be missing the trade. Anyway, I will be rejecting the trade because RR is 1:3 RR is not there. If luckily prices entered in the adjusted area, it will be a good trade for us. See, prices exactly entered into the adjusted area. See here, this is the area. Moved a little. That means our entry is triggered here. And after that, it reached the target in this candle. When you took the trade, 13:15 candle. Let me go to 5 minutes, you get better clarity. This is the candle we got the trade. 13:15 candle. And when it reached the target, 14.5. That means within 50 minutes your trade is completed. That too, the last 2 hours of your trading session. By this time, your earlier trades you might have already closed your earlier trades. Morning 9:30, whatever the trades you might have taken, the trade you already closed at 11 o'clock or something, 11:30. Now, same capital you can use for taking this trade. At Zydus Life at 1:15 and reached the target at 14.5. And how much profit Zydus Life has given? 3,915 rupees profit, close to 4,000 rupees. And how much ROA it has given? 2.5% ROA as per one margin cost. If you would have already taken Delhivery, you would have got 6.5 and again 2.5 with same capital. 9% ROA you would have captured today in futures point of view. If it is options, maybe you would have got even more profit if you managed the risk. So this is the way Zydus Life has given the last 2 hours trade, 2.5% ROA it has given. See, the analysis you should do in a proper way. See, you have to understand how much remaining time. How I analyzed how much remaining time is there to close the market. 2 hours. Within 2 hours, is it practical to reach? Maybe it can reach, but it is not very practical. It needs a lot of time. People will be booking profits last hour. Again, it may move up. Anything will happen. Generally, at 14:30, people will be booking because those who do cash trades, not F&O trades, cash trades has to be intraday trades. I mean, cash intraday trades I am talking. If you take a cash intraday trade in cash segment, you have to close whether short trade or long trade by 2:30 or 2:45. If you don't close, your broker will be closing your trade automatically. So that's why at the time during 2:30 and 2:45, prices mostly may move against the earlier price direction. Earlier price direction, see, prices are moving from top to bottom. Now bottom to top they are moving. See the candle at 2:35 candle, this is. Because why moved up? Some profit booking took place here. Whoever took the short trades, they all booked their trades here. Okay, those who are following supply demand zone might have booked the profit here. So in such kind of situation, reaching target during last 1 hour is very, very difficult. Because this is 2:30, 3:30, it should travel from here to here. It is not practical. How I took decision? By seeing these two leg candles. We have a new supply demand zone price action concept. Between two leg candles, the concept is saying wick of the candle, higher wick of the candle, lower wick of the candle. If you draw a zone, mostly strong institutional order flows will be there in that zone. Many times this concept works. Of course, there are sometimes the concept will fail, but many times. See, even today, this profit booking also, how it holded the stock. In Delhivery, we took aggressive trade for short trade. The same kind of concept. But here in Zydus Life, go to 15 minutes. You have a rally candle, you have a rally candle. These two are 15 minutes candle. What is that I told you? Mostly in the next time frame or 2 time frames below, you see the order flow. Rally, rally, go to 5 minutes. 5 minutes also it is reflecting as exactly within this area, rally, rally. Now you have to go one more time frame. Go to 1 minute time frame. Now you have 1 minute institutional order flow here. How do you draw institutional order flow in 1 minute? Maybe rally, 3 base candles and a rally. How do you draw the zone? Like this. This is how you draw your zone. Probably you would have booked your profit in this candle, 1437. We booked here because directly without drawing a 1 minute zone, whatever the other concept has given, it exactly reached up to here. We exited here. Of course, how much profit you get extra? Maybe 10 paisa or 20 paisa difference you will get. Anyway, while booking the profit, you keep some buffer before that. Some 10 paisa, 20 paisa, 30 paisa, depending on the price, and you exit the trade. If you draw wick to wick, see, exactly it touched. But see here, the new supply demand zone concept that I explained you, the zones we identify between 2 wicks of 2 leg out candles. That means 2 leg candles. The large leg candles, these order flows are much effective rather than taking the medium leg candle. Medium leg candle also they may work, but 2 large leg candles between the wicks, the order flow is much stronger. That is what you have seen in the 5 minutes candle. You have a large candle, this is also a large candle. Go to the 15. This is a large candle, this is also large candle. They are not medium size candles. Medium size also you can use. 1 large candle, 1 medium size also you can take. No issues. If 2 are medium size candles, maybe success rate is very less compared to the zones between 2 large candles. It's a very powerful concept. So this is about Zydus Life, and also we got one stopped out trade. There is one more stopped out also happened, but we didn't plan any trades because we know the zone will be violated. But Navin Fluorine is a clean trade, but it is stopped out. So we have to accept. Navin Fluorine is a demand zone, 75 minutes demand zone. Previously we took profit from this zone. Last Friday or Thursday we took the trade. Navin Fluorine. Let me check in the Excel sheet. Yeah. On 13th, last Friday we took the trade. We got a profit, 4.2% ROI it gave. This is a 75 minutes zone, drop based rally. Actually, this zone is not having a fine-tuned zone, but a Friday dynamic. Dynamic means on the live market, zones were created and retraced to the same zone. Let me go to the 15 minutes time frame. Monday we discussed about this zone, drop based rally. There we have a fine-tuned zone, rally base rally. See here it gave a trade and then price moved up. And during this process here also it created a new 15 minutes zone. See here, rally, 2 base candles and rally. This is not a fresh zone because already we took trade. But this is a fresh zone. Rally, base, rally is a fresh zone. At least type 2 is fresh zone, not type 1 proximal. Type 1 is a tested, type 2 is a fresh zone. This is type 2. If you draw type 2, see here. Last Friday it entered into the zone and again it moved up. Of course, it gave again a good profit. till the closing hour of the market. But a type 2 point of view, even if you draw like this also, it is tested here. So type 2 point of view, we have a drop, 3 base candles and a rally candle. So it is a fresh. Type 2 is fresh. High liquidity zones, mostly we take type 2. Even if type 1 tested, many times it gives profits to us, many times. But today it failed, we have to accept. Go to the 1 minute today, morning. Which candle it is? Morning 9:15 candle. That means majority of you people would not have taken this trade. That means you won't be having any harm from this particular candle. Mostly 9:15. But maybe there are chances that some of you might have placed a trade here. Let us assume your trade is executed, then it is stopped out. After that it moved up. But majority of you people would not have placed this order. But high liquidity zones performance point of view, definitely I have to calculate. If it gives profit, how zones are working, I have to calculate. If it is stopped out, how zones failed, that also I should calculate. Okay, for individuals point of view, most of you might not have got this trade because this is not a practical. Because always we discuss 9:15 candle trade is not a practical trade. At least 90% or 95% scenarios. Even 1% is stopped out, that is a valid scenario for us. So that's why we are considering 9:15 candle is also a trade because it is stopped out in 9:15. So I have to register in our Excel calculations performance of our HLQ zones. So that way Navin Fluorine has given 831 rupees loss, which is 0.7% negative ROI. It's a minimal loss compared to all these profits. See, all the remaining trades took place after this 9:15 candle only. So that's why there is no question that you took a trade, you struck up here and you missed the remaining trades. There is no such kind of excuses to tell. Definitely all of you people would have taken a trade in one of these stocks. Okay, this is about Navin Fluorine. There is one more, PFC. If you make a mistake, you would have taken a trade in this zone. That's why I am immediately explaining. Actually, you can't accept both the trades in PFC because they are the tested zones. Okay, first of all, it is a 75 minutes high liquidity zone identified by our software. We have a drop. You have 1, 2, 3, 4 base candles and a drop candle. This is how our software identified. And this one we fine-tuned with 15 minutes time frame. Here you have 15 minutes order flow, drop, base, drop. If you hide the candle, you see this is a big candle. See here, this is a drop candle. This is a small candle, base candle, and then a drop candle. That's why this is a valid 15 minutes fine-tuned order flow. And also here you see, you have a rally, you have a base, and then you have a drop candle. Rally, base, drop. This is another fine-tuned 15-minute zone. See, the 5-minute zone is tested already. So that's why we can't plan this trade. This is the fine-tuned. At type 2. Type 2 is tested, type 2 proximal. So this is also a tested that you will understand in 5 minutes. Here you have a lesson to learn that I will explain. See the first one, why we can't take a trade. We have a rally, 2 base candles, and this is a drop candle. You may say this is also a base candle. This candle is also length same as these candles. That way you may say, looks like. Now at the hidden body here, it gets some more body. This entire thing is a drop candle, a big candle. From here, at the hidden body, that is what you learned in lesson 9.3 and 9.4. I explained these concepts. hidden zones and hidden bodies. So that's why rally base type 2 proximal we planned, and this is already tested. The same day it is tested. So this order flow may be doubtful. Better not to take. If anybody might have thought this will work, and if you took today, it would have been stopped out. But it is a tested. But unless it is a confirmation of high liquidity zone, you cannot plan a trade. Because it is tested twice, can we consider this as a high liquidity? People may think like that. No, you cannot think like that. More than one tested is not multiple, several times. What is the several times means how much? That we cannot tell. It's up to you. Some people may consider 3 times, some people may consider 4 times, some people may consider 5 times. At least a minimum 3 times you may feel. That is one option. Or another option, high liquidity zone even tested one time, if it creates a rally based drop. See, this is not a drop candle. But suppose let us assume this is a rally based drop, then you can believe, at least 80% you can believe this could be a high liquidity zone. Because high liquidity zones, fine-tuned areas are 5 minutes or 15 minutes, many times LOTL zones will be created. Many times. At least 80% you can believe it could be a high liquidity zone. But is there any rally based drop? No, rally base only. All. Here also just a rejection. So that's why you can't assume this is a high liquidity. It is a tested. We don't have any clues that it could be a high liquidity area. Then what could be high liquidity? Let me show you an example. I'll come back to PFC. I think Bank of Baroda. See, Bank of Baroda, we got a trade today, right? This is the one. This is the fine-tuned zone. See here, rally-based drop again created. That way we can assume this could be a high liquidity. You can plan next trade also in this zone. See today what happened? Prices came near and sharply it came down before closing. Because this is the last 15 minutes or 20 minutes of trading session. Mostly you won't take the trades. Even if you take a trade, see, you would have got some profit. You didn't reach this rally-based rally 5 minutes target. You didn't reach because there is no good enough. But you might have closed somewhere just before last 1 minute. You might have closed here, or maybe last 30 seconds. You must have closed your trade. Some profit you would have got. Why? Because rally-based drop created. But what is the origin? This is the origin. That's why you plan your trade within this area. Maybe you keep some small entry buffer mostly. When you plan, maybe your trade would have been executed, or narrowly you might have missed this trade. But next time we can plan a trade in this zone. If our software identifies this zone as a high liquidity zone once again, at the time you can plan. If our software does not identify, tomorrow you can't plan your trade here. It may work or it may not work. There is no guarantee. Chances are 50-50%. It's not 80% success rate won't be there. This point is only for high liquidity zones. Not you cannot apply this point to the other concepts like bullish and bearish trade setups. Bullish, bearish trade setups, they work as long as the zone is valid. That means as long as bullish, bearish trade setup is valid, if today's stock identifies, after 1 week also you can take a trade. After 1 week still that is a bullish trade setup stock. But high liquidity zones are not like that. If our software identifies today end of the day the zone will expire. Tomorrow if you want to take a trade, tomorrow also again, today end of the day report, it should display the same stock. If it doesn't display, you can't plan your trade in this. See, such kind of clue have you seen for PFC, Power Finance Corporation? No, we didn't see such kind of clues here. That's why it is, you can't treat this as a high liquidity. Because it is a tested zone, don't take any chance. If you would have taken a tested zone, see today it is stopped. Maybe it moved, some push it has given. But this is not good enough to book the profit. I think it is not even 1:3. RR level it reached. After that easily it is violated. And see the next one. So maybe this you can consider a big candle, a failed ERC candle as a leg-in. You have a base candle, you have a drop candle. Have you seen next candle? Is it visible to you? This is the one. And this candle, see, prices went sharply, came down many times. The next candle to the leg out candle, if price entered, came down, we consider that as a rejections. Even though it is tested, we plan our trade. But conditions apply. What conditions? Prices should not go deep inside. It should just touch this type 2 proximal and then sharply come down, so that the remaining order flow in the zone won't be disturbed. Even if it went a little above the proximal line, and then it should come down. But see here in this candle, price almost near to the distal line it reached. See here. Price reached almost close to the distal line. See how much order flow it consumed. And believing the small order flow, does it make sense? It is quite risky. Suppose if price went, just touched, just kissed this proximal line, or went a little above and then sharply came down, definitely we would have considered this zone. That is an indication that a strong order flow. Because leg out candle, prices entered into the zone, and if they come out, mostly we consider them as a rejections. But follow through candles also should be there. Yes, it is there, a follow through candle. But that is not good enough to take trade next time. Because a very small area is there. We don't know how strong the order flow. It is a highly risky taking the trade. So that's why you should consider this is also a tested zone. Generally rejections we don't consider as a testing immediately after the leg-in. But this is the one exceptional scenario, because it moved almost near to the, prices moved near to the distal line. First of all, this is a type 2 proximal and risk is small. That means the order flow is small. And moreover, the prices were reached up to near to the distal line. So that's why this is a rejected. We can't plan a trade. We know that this zone will be violated. That is what happened. See, this is also we know it will be violated because it is a tested zone. They are against our rules. This one is easily violated. This is also pierced but came down. Once it is pierced, that's it. It moved up. Completely violated. Okay, why it came down after that, there are other reasons will be there. But this zone order flow is gone. So that's why we should avoid PFC trades. Because these points we discussed in lesson 16 when a zone will be violated. Not only in lesson 16, some important videos, important analysis and videos playlist also, in the live HLQ analysis videos, live means after market hours analysis videos also, several times I discussed in the old videos when a zone will be violated. Okay, this is the one thing, and apart from that there are a good number of other stocks. Nifty is also there. Nifty is a daily high liquidity supply zone. Already we analyzed Nifty 50 few days back. Probably on this candle our software might have identified when it is on 5th December. So 6th December HLQ analysis video, I might have explained you how I fine-tuned these zones. Because this is the one I did not fine-tune yesterday. It is already there in my chart. The same analysis we are using. So how I explained, how I fine-tuned, please refer that video. Otherwise again it is waste of time repeating the same thing again and again. So those who want to know how we fine-tuned Nifty and those who missed this trading session, please refer 6th December HLQ analysis video. Laurus Lab, continuously we are getting this stock for the last several days. See here we have a, here. You have a pierced zone. Gave several tests. And here it pierced. Even then again it is testing. Why? Because here 1 minute HLQ zone is created. Institutions, that is what they do. They create an impression zone will violate so that we don't get into that zone. Again institutions add an order in that area. by creating other zones. See, again tested first time, tested second time, tested third time. Today also. First today, this is morning 9:45 candle. It tested this zone because this is the 1 minute zone. The 1 minute HLQ zone, this is the one. Let me go to the 1 minute, you will understand. Here we have drawn this 1 minute zone. Rally base drop. And this 1 minute zone is working continuously. Today 16th December, today morning at 9:45 candle, it touched this zone and again it reached. The blue color line what we have drawn, many times prices are reacting from here. Today also it reached this blue color line. This is the target. This is the one we drawn a long back. Long back means a week or 4 or 5 days back. Last Friday, sorry, not last Friday. Somewhere here. Okay, anyway, but why I am not capturing this is because most of the times those who have taken this trade, maybe it's a good trade for you today, because the 5 minute zone I ignored. But aggressive, 1 minute aggressive high liquidity zone you could have taken. But again, today see this 1 minute zone is also violated today. 1 minute zone is no more valid. But maybe institutions again they may create a new zone here in this within this area. That possibility is there. See here rally base drop is created again here, institutions. Rally base drop exactly in the area. These are the tricks played by the institutions so that because these zones are violated, we don't focus on them. Anyway, you will learn all these techniques, tactics, not techniques, tactics when I explain about the next training lesson, pierced zones. In the coming weeks, I will be explaining. All these tactics I will be explaining, how institutions will think and how they will be. Why? Because of their thinking, how pierced zones are getting formed. Later on, how institutions again make use of the pierced zones so that we don't focus on them. But still they will be playing with us. Because they want their order flow should not be disturbed with our because we are following institutions. They don't want us to follow them. That's why they are following the tactics. Their tactics we identified with by using the concept pierced zones. Because the pierced zones is a new concept I developed. That's why we are able to identify institutions' mindsets. Okay, next one is L&T. L&T also reached the target, but we didn't take the trade, L&T. Why we didn't take the trade, I will explain. See, L&T reached the entry. It gave a short trade here, fine-tuned 5 minute zone. See, till 15 minute zone it is reached. And when we got the trade, L&T trade, morning 9:22 candle, and when it reached the target, 10:42 candle. That means within 1 hour 20 minutes it reached the target. It would have been a good profit. But why we didn't take? How much profit we would have got? First, before I explain why we didn't take the trade, how much profit we missed, let me explain that first. Then only interest will be created to you. Then only you focus why we didn't take the trade. 3913 is the entry. Minus what is the target? 3873.90. Of course, we add some buffers and we take trades, but calculations point of view, how much profit we would have got? 39.25 rupees profit. Let me open the margin calculator, zero the margin calculator. Our stock is L&T. say December futures. See, what is the lot size? 150. What is the futures cost? 1,03,000, around, maybe a little high, or wherever it is closed. Based on that we can tell. Maybe something around 1,04,000 rupees, say. Maybe a little higher, but okay. First, how much profit we would have got into 150? We would have got 5,887 rupees as per one future. If you would have brought two futures, you would have got nearly 11,000 or close to 12,000 rupees profit you would have got. Maybe 11,500 rupees profit you would have got. Because here the futures cost is very close to 1 lakh. At least you would have brought, if you are having some 2 lakhs or 2,15,000 or 20,000 income you are having, suppose capital if you are having, you would have purchased it too. Okay, what is the ROI it has given? Into 100 divided by 1,04,000 approximately. You would have got 5.66. So that means 5.7% ROI you would have got. Close to our average ROI 6%. Intraday average ROI 6% for our HLQ zones. Very close to that you would have got in just 1 hour 22 minutes. But why we didn't take this trade? The reason is a risk, very high risk, very, very high risk. If you want to take a very high risk trades, still you can take by position sizing. Only in the cash segment only you can manage. When you have such a huge risk is very, very high. You can't take. Now you tell me, can you take this much risk? You don't have RR. Not even 1:1 RR you have. See, your risk is high, your reward is less. If it is hit your stop loss, maybe you would have got a 7,000, 8,000 rupees loss. But because it is a high liquidity zone, success rate is high. Many times such kind of zones are giving you profits. But we can't deviate from our risk management concepts. Please remember, those who are deviating risk management concepts, even though you are getting profits, if you are taking risk deviations, you are not a good trader. Why I am saying even though you are taking trades? Because HLQ zones are having 80% success rate. Sometimes blindly we take the trades by not following the risk. Even then they work because the failures are very rare. How many stocks failed this month so far? Only 2. M&M Finance, same day 2 stocks it failed. That's why it's looking 2. But 1 stock is failed, M&M stocks point of view. And Navin Fluorine today. And how many trades we got this month so far? We got 30 trades. Out of 30 trades, only 3 trades are stopped out. So far we have 90% success rate. So that is the reason why sometimes people are blindly taking the trades without following the risk management. To make you guys alert, I am talking about this point, what to say, I am focusing on this concept. You cannot take trades. They are not following RR, they are not following the risk. Blindly taking, okay, it is a high liquidity zone, anyway it will work. It worked, right? That's why you are saying, anyway it will work. Let me take the trade. This is the way people are taking the trade. Anyway I get profit. But there are times it will violate. That day you will get caught. All our capital will go. Don't never encourage such kind of trades. You have other stocks. Beautifully managed the risk. In an excellent way we managed the risk in the remaining stocks. Plan in their stocks. At least you need to spend some time, 5 minutes, 10 minutes for calculating the risk and verifying the risk. If you don't spend even that much time and expecting profits, Maybe because of these HLQ zone concepts, you are getting profits, I agree. But that will make you an indisciplined trader. I don't want you people take trades like that. Your money is not important. How much money you are earning, that is not important. With how much discipline you are earning the money, that is more important. Even if you get small profit, if you are having a proper discipline with risk management, never your capital will hurt. Even in disaster situations also, your capital will be within your control situation. So please follow risk management properly. See how I fine-tuned, why we got so much risk. Let's understand here. So this is the daily high liquidity zone. We have a drop, base, drop. Sorry, maybe not drop. This is a rally, 2 base candles and drop. Because we have drawn up to here. Our software identified rally, 2 base candles and drop. And this 75-minute zone is fine-tuned with this daily zone, not 75. Sorry for my mistake. This daily zone is fine-tuned with 75 minutes time frame. So in the 75, you have a rally, base, you have a drop. Because highest wick of the leg out candle. So that's why we are getting a big risk here. Maybe in the fine-tuned, maybe somewhere here if zone is there, we focus on that particular area. That's why we always fine-tune to find the exact institutional order flows. Now go to the 15 minutes time frame. See 15 minutes also you have, see here, you have a rally, 2 base candles and a drop candle. Rally, base, drop. This is the 15-minute zone from here to here. Now within this 15 minutes area, again you have a 5-minute zone. So here 5 minutes also you see. You have a rally, you have 1, 2, 3, 4, 5, 6 base candles and a drop candle. So this is also a valid zone. But see the risk. The order flow is very strong. But risk, you never know where the strong orders are there inside, where the weak orders are there at different price levels. We don't know. Suppose your entire thing is weak area, if you take a trade and if the zone is violated, today definitely you would have got around 10% of your negative ROI you would have got. Instead of getting maximum allowed is 2%. 10% capital, your investment is gone means that's a very bad trading. You may say anyway it worked. Most of HLQ zones are working like this. If you think like that, that is totally nonsense. We must follow risk management. That's why in our training course, lesson 5 itself I introduced risk management concepts. Lesson 5, I think even lesson 3 also you might have learned risk management concepts. No trainers introduce risk management so early in their courses because they have fear that probably people don't like. Many people feel risk management concepts are boring concepts. They are not boring actually. They are powerful concepts. They are protecting our capital. That's why almost end of their training programs they will include it. Look into the course curriculums of how people are teaching. Somewhere in the middle of the subject or end of the subject, people will be teaching. Not only supply demand zone. In any technical analysis, the last topics will be risk management. By the time people will get exhausted, won't concentrate. The topmost important concept people are ignoring. I know how people are learning these concepts. That's why the risk management I introduced from lesson 3 onwards. Lesson 3 or lesson 5. One of these lessons I introduced. Why so early I introduced? Because that is a very important concept. That's why we learn risk management at different levels. Phase 1 we learned, phase 2 also we learned. So much importance we gave it to the risk management because it protects our capital. Even in negative wrong scenarios or bad scenarios also, your losses will be very minimal. That's why, see, always our losses are small losses. Rarely you see above 1 or 1.5%. Otherwise, many times, see 0.6, 0.9, 0.6, 1%. Most of the time, they are around 1% or less than 1%. Definitely not beyond 1.5. Rarely you see those trades. All these are all, see here, all the stopped out trades. But when you get the profits, see, compare your profits and losses. When you get profits, you are getting big profits. When you are getting losses, small losses you are getting. That too, losses you are getting rarely. See, you are seeing red things, red color text you are seeing very less. Most of the text you are seeing is black color text. Red color I am giving for stopped out trades. From the beginning, so far how many trades we have? So far 570 trades. But we have missing data in the month of July. Earlier I was posting this Excel sheet because the missing July data is there. I am not finding time to analyze the whole charts. Because 1 month I have to, because I was inactive in the month of July. Because at the time our channel was not growing, I was disappointed, and I lost my interest. After that, some of our members interacted with me, requested for start these premium videos. Premium means like videos you will be paying small money for taking the premium subscription for not for the analysis videos, software generated. Because people want software generated reports. They don't want my recommendations. Even if you ask, I am not giving recommendations because I am against to that. And also I am not SEBI registered. I am not supposed to give you any recommendations. Only supply demand zones, software, whatever it is generating, those reports only you people are just getting through videos. That's it. Those videos only we named it as premium videos. You all aware of that, right? Okay, this is about what is the one L&T. But otherwise L&T, if people don't follow risk, for them also it is a successful trade. But we didn't take the trade. Zydus we discussed last 2 hours. We got this trade. Navin Fluorine stopped out trade we have. And next one is Supreme Industries. We didn't have any trade today. I think Supreme Industries, have we discussed on Friday? This is a 75 minutes high liquidity zone. This is a drop base rally. Drop base or rally base, sorry. This is the drop base rally. Software identified drop base rally. This one is fine tuned with 15 minutes time frame. We have a rally base rally. We have identified this is LTF as an order flow. Apart from that, we also identified a rally to base candles and rally 15 minutes zone. Again fine tuned with 5 minutes time frame. Here 5 minutes LTF order flow is there. This is the one. We have a drop, 3 base candles and a rally candle. Drop base rally. This LTF is an horizon to this 15 minute zone. See all these candles, base candles 1, 2, 3, 4, 5, 6, 7, 8 and rally. This is not a valid zone, but they are picking the orders from this zone continuously. They are picking. This is holding the prices. This 5 minutes LTF zone as an horizon to fine tune 15 minute zone. This is the area we can plan the trade. This is again another within the 15 minute zone. Again we have a fine tuned 5 minute zone here. How fine tuned 5 minute zone? Rally 1, 2, 3, 4, 5 base candles and a rally candle and follow through candles. Here the imbalance started from here. Of course, including this candle also imbalance started, but still within this area some price action took place. That's why I am keeping this candle within our zone. And also see, it picked up the orders, and this entire leg out candle formation took place for 75 minutes zone. But before that, here we have an order flow, and last Friday prices entered into this zone, slightly pierced. Now it is no more valid, but it is pierced and prices were moved up. But today prices did not enter into the zone. See, this is today's price action, the 5 minutes. Prices did not enter into the zone. Anyway, we can't plan a trade. This is a pierced zone. Only in this LTF zone only we can plan a trade. And no proper 15-minute structures here. So that's why I didn't draw any zones here. Okay, this is about Supreme Industries. Bank of Baroda we discussed, LTF we discussed, right? No. This is a 75 minutes high liquidity supply zone. This is the one. Drop base drop. This is having 15-minute zone. Drop base drop. 15 minutes. This again fine tuned with the 5 minutes time frame. See here we have this is I consider as the rally candle, because see here at the hidden body, the moment you add the hidden body from this candle, it is a rally candle, base candle and a drop candle. And this 5 minute zone is tested, type 2 tested, and prices also went near to the, definitely this zone will be violated next time. That is what happened today. See, easily violated. So LTF is the one violated, but we know that when a zone will be violated, clearly the 5 minute structure is telling. You may say, this is why can't we draw drop, 3 base candles and drop candle, why can't? That's why I'm telling you guys, hide the candle, then you get clarity. The moment you hide, see, this is a drop candle, failed ERC candle. This is a failed ERC. So body is less than 30%, and see, prices are coming down in the dynamic view. This will be a drop candle. And this candle is resulted as part of the order flow in this zone, pushed the prices. But by the time before it pushed it down, it consumed majority of the order flow in this area. After that, the demand would have been completed, no more demand, and sharply prices came down. So that's why carefully, whenever such kind of gaps are there, you hide the gap and try to understand the structure of the candles. You just zoom in, you will understand. Okay, so this is no more a valid zone, this 75 minute zone. PFC we discussed, or is the next one is Tata Chemicals. Tata Chemicals is 75 minutes high liquidity supply zone. Today prices looks like we got a trade with some entry buffer, we would have got a trade. No. It looks like this, but it is not good enough to get the trade, the movement. Moreover, this entire movement is in morning 9:15 candle. Okay, how I fine tuned this 15 minute zone. We have a 15 minute structure here. See, this is a ERC candle, failed ERC candle as a rally. Then you have a base, one more base candle, and then a drop candle. Rally, base, drop. And in the 15 minute, in the 5 minute structure, there is no, see here, hide the candle, you will get clarity. This is a drop, base, rally. In a supply zone, we need a drop, base, drop, or rally, base, drop. But here we have drop base rally is there. Instead of drop candle, we have a rally. So that's why this is a rally candle. Next we have a drop candle. In between no base candles. But the magic is our lesson 22 concept. What is that lesson 22 concept? Here it is having a rally, 2 base candles and a drop candle. This is the 5-minute zone as an horizon to this entire 75 minutes high liquidity zone. And this candle movement is because of this order flow from this 5-minute zone. And it picked up the orders from this 5-minute zone as an horizon, and this entire leg out candle formation. Which leg out? The entire 75 minutes leg out candle formation, all these candles. And this formation took place by picking the orders from this zone. Rally, 2 base candles and a drop candle. So this is the area we should plan the trade. Today prices came near to this and she sharply pushed it down. Probably this entire area, new orders might have been added by the institutions. But anyway, you can't place an order, it is not good enough even if you add the entry buffer, and moreover it is a morning 9:15 candle. You can't expect a trade in morning 9:15 candle. This is the morning 9:15 1-minute candle. So that's why there is no hope of getting a trade from this zone. Even if you think like that, it's not correct. Okay. And the last one is Tata Steel. Tata Steel also we didn't get a trade. It is also 75 minutes high liquidity supply zone. Price just entered into the zone, but not into the fine-tuned area. Okay, how our software identified this zone? Our software identified this zone as a rally, 2 base candles and a drop candle. And this one fine-tuned with 15 minutes time frame. Here we have a 15-minute zone. We have a drop. You have 3, even if you hide this, okay. You can consider as a medium, comparing with other candles. See, how I do? Always I compare with the other candles on the chart. These are all the large candles. This is maybe smallest in the large candle. Maybe these are the medium candles, maybe largest in the medium candles. That way I am assuming. That's why I included all these candles part of the base. Drop 1, 2, 3, 4, 5, 6. See, ultimate goal is to find any order flow in this area. That's why I have drawn this zone. And if this my understanding is wrong, the zone 5-minute structure will be very bad here. But see, the 5-minute structure, we have a rally based drop, but I didn't draw here. Where I have drawn? Before this 15-minute structure, institutions created rally based drop. Rally based drop. Maybe this is the smallest in the large candles. Maybe these are the large candles. So you can't compare this size with these very large. They are very large candles. See, these are the medium size candles. See, compare with these medium size, this is the large candle. By comparing with these very large candles, these are the very large candles, it looks like maybe you get an impression this is a medium candle. No, these are the medium size candles. Compared to this medium, this is a large candle. So that's why it is a valid leg out. I think all of you are aware, there is no relation between leg in and leg out. I remember earlier one of the Q&A questions also one person asked, I answered. If you refer the Q&A videos, you will find that. One person asked, maybe I don't know where he landed, he asked me, why are you drawing this zone? Because the leg in is bigger than leg out, you cannot draw the zone. That is what he asked me. Maybe somebody thought this concept in a wrong way. There is no relation between leg in and leg out. Leg in can be bigger than leg out, but the rule is leg out should be a large candle. That's it. It should not be medium size. It is a large. So is it a large? Yes. Compared to the other medium candles, it is a large candle. But these are very large candles. So this very large and large you cannot compare. Large is enough. Large is enough to qualify as a leg out candle. So it's a valid candle, rally base drop. That's why see again a test. Rally prices entered and sharply how it came down. But institutions here you see they created a rally base drop again. Is it a drop candle? Yes. Now you see this is a large candle. This is a large candle. This is also a large candle. Why I am showing this? You may say this is a tested zone. No, you cannot think like that. See, this is a rally base drop. Again another rally base drop created. Maybe this could be a high liquidity zone. Because high liquidity zone only we see such kind of price actions. 100% can we say? No, at least 80% level we are saying. And moreover, this is a new rally base drop exactly within the area. That's why this is the origin. In this origin, next time again you can plan another trade. Even though it is a tested zone, still we are planning another trade because LOTL zone is created exactly in the same area. And this is a clue for us to identify it could be a high liquidity zone. At least 80% chances it could be a high liquidity. So that's why we can plan a trade today, but today prices did not enter into this zone. We didn't get any trade opportunity. So these are the HLQ zones identified from the previous report. I think you have a lot of learning from this video. Let's all meet again in our next video. Thank you.